Hey friends from Facebook and Instagram, I'm here with Miguel, our preferred lender. We basically today want to bring you information in regards to what's the difference between an FHA loan, which is a regular FHA, you bringing your down payment versus receiving down payment assistance. So hi Miguel, how are you this morning?
I'm doing pretty good. How are you, Edma?
I'm doing great, thank you.
Awesome.
So educate us. What's the difference between bringing your down payment versus receiving a down payment assistance?
Okay, so there's a difference in regards to debt ratios. Okay, so I'm just talk about a little bit about the down payment assistance program, so like that you can know what the what the amount would be to qualify for that program. So let's say we're looking at a borrower. Minimum credit score for a Cal HFA loan is 640 credit score. Okay, for an FHA loan. So let's say the borrower is making about $8,500 a month, right, for a Cal HFA loan. We're looking at a pre-approval, and again, this is based on a borrower with a car payment of $500, and let's say a minimum credit card payment of $100. Okay. So a borrower making $8,500 a month, we're looking at a purchase price of $400,000. Okay. Let's say let's say they want to go the regular FHA route. Okay. And they're like, hey, you know what? Let's see how much I can qualify if I was to have my own money, not using the Cal HFA program. Okay. So if we're looking at a regular FHA loan, right, it does allow you to qualify for more because the debt to income ratio can be higher. On a Cal HFA, maximum DTI ratio, which is front end and back end ratio, which is your front end is your gross income versus your mortgage payment, and back end ratio is your gross income versus your mortgage payment and any minimum payments you have as debt on your credit report. Okay. So for a regular FHA loan, you would qualify for a $550,000 property. Big difference, right? The down payment and closing costs for an FHA loan without a down payment assistance program, you're going to be looking right around $31,500. Okay, but again, you qualify for a higher amount because it does allow you to go up to, on your back end ratio, up to 56.9% certain times, right? Okay. Front end, you're looking at about 46.5% right around there. So that is the difference. But again, let's say you don't have the $31,000, you only have $10,000 in your bank account, then you're going to have to take advantage of your down payment assistance program, right? Which we're going to have to take you back to the $400,000 purchase price because the max amount is 45% back end ratio. And that amount would be $9,600 for the down payment assistance program. And that's because we're in a seller's market right now. Most sellers are not helping with closing costs. Exactly. Right? So we're going to want to see at least $9,600 in your bank account for a Cal HFA loan.
Okay, great. Now my question, I mean, I'm sure a lot of people here are listening to your terms in regards to DTI, back end ratio. Can you elaborate a little bit about that so they can understand what those terms really mean?
Yeah, so the debt to income ratio, again, is something that lenders use to determine how much you're going to qualify for and how high we can go. Again, a front end ratio is basically your mortgage payment versus your gross income. Okay, that's how we're going to determine what your front end debt to income ratio is. Now, if we want, now we have to also determine what your back end ratio is. So a back end ratio is your gross income versus your new mortgage payment and all your liabilities that report on the credit report. Okay, so we don't take like insurance, water bill, electricity bill, the gas bill. We don't take that in consideration. What we're going to consider is whatever is reporting on your credit report, your minimum monthly payments. So that's your back end ratio.
Okay, great. Now talking about the whole down payment assistance, I'm sure some people will have this question. Is a down payment assistance loan going to be like an additional loan, or it's everything going to be combined?
Very good question, Elma. Thanks for bringing that up. So there we go. So basically for this Cal HFA loan, it does have a second and it does have a third. Okay. So they do have to be repaid back. So if we're going that Cal HFA route, there's a 3.5% that it helps you with, which is called the My Home program. So it's 3.5% of the purchase price. And then we have the ZIP program, which is a 3% that helps you out with 3% of whatever the loan amount is. Okay. So we combine that second and the third. Let's say if it's $18,000 combined, then that second and the third is going to be a silent loan, which you don't have to make any payments. But let's say in the future, 3 to 5 years from now, you're looking to refinance your mortgage or you're looking to sell your house. Guess what? That second and third is going to come back and say, hey, Claudia or Mr. Avalos, you owe me $18,000 and it has to be paid. So you don't have to pay it out of pocket. It can either be paid through the refinance or it could be paid through the proceeds of the sale of the house.
Oh, okay. Okay.
Right.
Perfect. And okay, so now we have the down payment assistance FHA, and then we have regular FHA, right? I've had this question where they say, well, you know what, I really don't like FHA because I feel it's a government loan, right? There's can you elaborate a little bit? I mean, what do you think about that?
Well, yeah, I mean, people think, oh, there's strings attached to the government loan. I'm gonna have to pay them something, right? A premium or anything like that. No, it's just a Federal Housing Administration program, you know, that was created. And yeah, it is a government loan, you know what I mean, getting made, but there's no strings attached in regards to you having to pay an additional premium or that. The only difference that I can tell you is that there is an upfront mortgage insurance premium that does have to be paid with an FHA loan versus a conventional loan. Okay, so that upfront mortgage insurance premium doesn't have to be paid out of pocket. It could be added to the loan. That's the only thing that could be added to the loan when you're purchasing a house. And that percentage is 1.75%.
Oh, okay.
That's added to the loan. But yeah, there's nothing else that, oh, it's a government loan, I have to pay them back sometime in the future. No, you don't. There's nothing that states that you have to pay something additional. Great. And again, FHA loans, they're very great loans for the reason being is they're very how can I say, not conservative, but very easy when it comes to credit. So let's say if you have charge-off accounts, you have collection accounts, you have even sometimes repossessions, FHA will approve you for a loan versus a conventional loan. More than likely, it's not gonna like your credit profile and it's gonna, you know, qualify you for a loan.
Oh, okay, great. Okay. Well, I appreciate your time and coming over here and giving us so much information. One last thing. So basically, what's a minimum FICO score they need?
So for an FHA loan, the minimum FICO requirement is 580 score.
580 score.
580.
And that's either whether it go down payment assistance versus just a regular FHA, right?
So for a regular FHA loan, it's 580 credit score. If we're looking for, like, let's say the Cal HFA loan, it's going to be a minimum credit score of 640 for an FHA loan.
640. Okay, so 580, 640 with down payment assistance.
Right, exactly.
Okay, and of course the norm, right? 2 years of employment.
Exactly. We are going to need a 2-year work history. So that's the number one question that I get from borrowers. I only been in my job for 3 months. I'm not going to qualify. That's not necessarily true. What we're looking for is a 2-year work history, right? So let's say if you're working for, let's say a loan officer, right? Like myself, you know, I was working for American Pacific Mortgage and now I'm working for WMG Mortgage, right? But I'm W-2, right? It's the same line of business. No problem. You'll still qualify, even though you've been at your current job for 3 months. Okay,
great. Well, good information. Facebook friend, Instagram. I hope this information helped you. Please call my preferred lender, Miguel Avalos, or myself, and we can't wait to help you. Anything else?
Nothing else. Just to let you know, Elma's a rock star, so give her a call. She'll get you into a house.
Thank you.